Hey, me again. Today we're going to talk about documenting your income if you are a W 2 employee. How do you know if you're a W 2 employee? If you are employed by a company that you don't have any ownership interest in and they take taxes out of your paycheck and issue you a W 2 every year, then this video is for you. To document W 2 wages, we will get copies of your W 2s for the last 2 years. And don't panic if you haven't worked for the same company for the last 2 years. Just go ahead and send over the W 2 forms that you've received from every employer that you have worked for in the past 2 years. If you don't know where those are and you're still working for the same company, often you can contact your HR department and they can get you a duplicate copy of your W 2. Or you can go to the IRS website at irs.gov and you can get a transcript of your W 2 if you don't have copies of them. But the W 2 is what your employer will send you in January of every year that will show how much you made and how much they took out in taxes. And that's the form that you use to file your income tax return. So we'll get 2 years worth of W 2s. We will get your full, complete pay stub that covers at least a 30-day period, the most recent one that you've received. And that's not going to be a screenshot from your app because most of the screenshots will not have all the information that the underwriter needs to calculate the income. So there are certain things that we're going to be looking for. We're going to be looking for your name, the company that you work for, the date of the pay stub, the gross pay, the deductions, the net pay, and the year-to-date pay. All of those things are vitally important when it comes to calculating the income. So make sure that you send the full pay stub that has all of those things on there. If you don't have access to a full pay stub, you can contact your HR department and get a copy. Next, let's talk about how we're going to calculate that income once we get all this documentation from you. If you're a salaried employee, it's pretty straightforward. Now, a salaried employee makes the same amount week by week by week, no matter how many hours that they work in that week. So let's say, for example, you're a salaried employee and you make $60,000 a year. What we would do is we would take that $60,000 and divide it by 12, and that's how we would come up with the monthly income, which is what we use to do that debt to income calculation that we talked about in the last video. So if your salary, it's pretty straightforward. Salary divided by 12 equals the monthly amount. That's what we'll use on the application. If you're hourly, then it can be a little bit different depending on how you're paid. So if you're hourly and you work 40 hours every week without fail, then we will take the hourly amount and we'll multiply it by 40 hours a week. We'll multiply that by 52 weeks a year, and then we'll divide that by 12 to come up with the monthly amount. So let's say, for example, you make $20 an hour and you work 40 hours every week. The first calculation is 20 times 40, and that tells us that you make $800 gross every week. We multiply that by 52 weeks a year, and we do that because some months have fewer days, some months have more days. So if we annualize it and then figure the monthly amount from there, we can account for some of those differences in the way that the days fall. So we take the $800 and we multiply it by 52 weeks a year, and that gives us an annual amount of $41,600. We would then divide that by 12, and we come up with a monthly amount of $3,466.67. And that is the amount that we would use for your base. Now, if you're also receiving variable types of income like overtime, bonus, or commission in addition to your base pay, those can still be considered as qualifying income for the mortgage as long as you've received that type of income for at least 2 years. So if you want to have your overtime or bonus considered, we need to show a history of you receiving overtime or bonus for the last 2 years. And we would average that. Since it varies from check to check, we'll average it over the amount of time that you've received it. What if your hours vary? Let's say one week you might work 45 hours and the next week you might only work 38 hours. If your hours vary from week to week, then again, we're going to need a history so we can figure out what the average amount is. With variable income, you need to have been on your job for at least a year for us to be able to have enough of a history to be able to count it. So in that case, we would average it over the amount of time that you've received it. So if you have any questions or any an income situation that you want to talk through and figure out how we would need to document it, reach out to us. We're happy to help walk you through this. We want to help you get a house this year. And because income goes into that debt to income calculation that we talked about, we want to make sure that we've got the income calculated correctly so we can figure out how much we can get you approved for.